Cannon Asset Managers' core investment belief is that capital markets are inefficient. Given the right resources, an appropriate philosophy and a strict and consistent investment discipline, an active investment manager should be able to exploit these markets' inefficiencies to produce superior portfolio results. For more on the group's investment strategy, Adrian Saville, Chief Investment Officer at Cannon, joins us in studio. Thanks very much for your time. Now, talking about innovation, you have put together a 10-can portfolio. Let's say it's your 10 best ideas. So
Sure.
Enlighten us on this new portfolio.
Well, it's not new. It's just we haven't spoken about it on your show. We've been running these ideas for a number of years. And essentially, you appreciate in the form that it's 10 ideas, it's obviously a high conviction, very concentrated portfolio. And that might translate into more volatility than many investors can stomach. But it represents 10 great ideas for investors, and by that I mean a 5-10-year investment view.
So you live for that volatility, do you?
Well, the volatility is a gift. And if you just take the sell-off that we experienced in recent months, what that has done is it's taken the JSE into what we think is some of the better price territory that you've seen in recent years. The prices at these levels are attractive.
Right, well, everybody's listening and saying, what are these 10 good ideas that you've got in the portfolio? So let's start with a couple of the stocks, and let's start with Conduit.
Sure. So Conduit, I know we've spoken about it recently, and what attracted us to the company initially was the incredible fundamental valuation. And here was a business, when we first looked at it, with a market capitalization of 180 billion rand, so it's tiny, straight away we must recognize that, but 250 million rand cash on the balance sheet. The cash on the balance sheet exceeds the market cap. This is equivalent to buying a house for 5 million rand, and the seller's just left 6 million cash on the bed for you.
Well, this sounds like a good option. Why would you not buy into Conduit?
Well, one has to look at the underlying business, and I haven't questioned Adrian about that, but
Sure.
you know, and exactly how they apply their working capital. If they've been accumulating cash over the past 2 to 3 years, which is the type of business I know Adrian likes to invest into, then you know it's any purchaser's dream, except that the price may not have moved because of the lack of liquidity in the short term. As liquidity increases, then that gap closes.
Yeah, I think that those are fair observations. And the liquidity in this type of business, of course, is an issue. This is not a multi-billion rand market cap, and it does require, I think, patience and discipline and farsightedness. But there's sufficient liquidity for many, many small investors to get involved. And for larger investors, we engaged with the executives, and we were able to acquire a decent position for our clients. The business itself has been accumulating cash because they have moved from essentially being an investment brokerage company to one that now writes insurance. Good margin specialist insurance. On top of that, they've developed an investment portfolio where they have a couple of profitable, attractive underlying investments. So it's essentially a three-legged business with the broking of insurance, the writing of insurance, and an investment portfolio. You could think of this perhaps in some way as a tiny version of Berkshire.
Okay. Tiny version of Berkshire. We can't leave it there. You can't put that statement in and think we're going to leave the discussion. That sounds very interesting.
Yeah.
Is it going to perform in a similar manner?
Well, look, the company is really profitable. At the moment, it sits on at a 10 PE. It has been profitable for a number of years in its current incarnation under Jason Druin. We think that there's a lot more to come from here in terms of return on equity, and importantly, the profitability is backed by cash, which is why you see this steady build of cash. In the last financial year, they did declare a substantial dividend. I don't think you should buy in the near term in anticipation of more dividend, but there definitely will be a dividend to be had in the fullness of time. In the meantime, if you look at the net asset value of the company as another way of assessing the opportunity, they report NAV as about R1. We think it's worth about R1.30 net asset value, in that they're carrying the investments at historical book value.
One more question. Where does management strength lie? Is it on the investments? Is it on the broking?
I think management investment lies in two attributes. The first is the ability to recognize good investment opportunity, and this is demonstrated by their recent activity over the last few years. The second is I think that this is a single-minded determination to write good quality insurance contracts and to look after that operating side of the business.
I'm just mindful of time because the audience is also saying he's got 10. You're going to
more.
stay on conduit only. Please can you share the other information with us?
Sure.
So take us through and just quickly tell us the weighting among the 10 ideas.
The weighting is approximately equivalent, approximately equal in construction. It moves across time as some of the stocks gather up performance or lose performance. And conduit is a case in point because just in the last month, the share price has moved from about 80 cents to R1, whilst the rest of the market has plodded sideways. So that starts to cause unequalness in the weightings.
Blue Label, let's go straight to Blue Label. It's a stock that we also discuss in Hot Stocks.
So Blue Label, I think the results are going to give some great insight into what's going on right now. But our interest in the company is sparked initially by a superb executive team. I think they've built an intriguing competitive edge in the provision of prepaid services, electricity, telecoms, and so on. This is a rapidly growing market. Now, one of the observations that I appreciate in South Africa is this might be a hard position to maintain, that is a vulnerable area. However, not only have they built advantages on top of those initial services. So for instance, if you buy your prepaid and you look on the back of the slip, you'll see advertising space being sold. But they've also started to move into other markets, Mexico and India. And that represents a unique opportunity, I think.
We've got to pick out Avenge.
Sure.
Early into
Back to the building and construction.
Back to the building and construction space.
We remain very, very patient with our building and construction position. In the early parts of this year, I thought at long last we were going to get the reward that we've been waiting for a couple of years. The building and construction firms substantially outperformed the market. In the sell-off recently, they've gone back to giving up a lot of those gains. It remains the case that these are well-run businesses. Across our broader portfolios, we have Group 5 exposure also, but in this top 10, it's Avenge. So this is a well-run building construction engineering firm. They're building a substantial order book outside of South Africa, I think wearing lots of scars and experience from recent times. Their Australian business continues to do well, and they have a very healthy dose of cash on the balance sheet. When we invested initially in Avenge, it was an 11 billion market cap with 8 billion rand cash on the balance sheet.
Yeah, no, I think we differ very much on the construction stocks.
But
I
I've got to
Adrian,
keep beating that drum.
2015, I'll buy his construction stocks. One of his others is Udeka, and I'm curious to know why Udeka. I mean, it's one of the smaller companies. Sure. I know that it has been well run over the past 20 years, but just doesn't seem to really expand as a business when you look at that turnover line. It's not an aggressive turnover growth.
Look, I think, oftentimes, well, not oftentimes, I think investment is not about sort of excitement and adrenaline and fast growth, but rather well-managed businesses that deliver healthy returns. And Udeka is exactly
and I'm just looking at the graph.
Point.
I mean, January, what we were trading at just, about 85 Rand? And then
it's had a substantial
huge
improvement.
Rally.
Sure. And that's been a very rewarding experience for us, having been invested there for a number of years. But we've been watching this company for the last 15 years, and over that time the business has been profitable every single year. It's paid a dividend without interruption. And yeah, fair enough, it's not an exciting business. They do make acquisitions from time to time, but their acquisitions have three attributes that we really like wherever we see M&A activity. The first is the acquisitions tend to be small and close to home. In other words, bite-sized investments in industries and firms that they understand. The second is they tend to pay value multiples for whatever they acquire. And the third is by habit, they pay with cash, which is a wonderful discipliner in making acquisitions. Of the company's shareholder equity of about 1.5 billion, 1.2 trillion, I'm thinking of Clem Santa language now, 1.2 billion is explained by retained profit. This is a business that has bootstrapped itself.
All right, tell you what we're going to do. We're going to do 5 today, and we're going to get you in to do another 5 at another time. So choose the stock that you would like to close with.
I think I'd like to talk about ELB. We haven't spoken about that for some time, and shareholder interest, market interest has come back to ELB. They just last week announced a substantial contract with Saville. Saville is in my top 10, but Saville announced a substantial contract with ELB, about an 800 million rand contract, which is meaningful in ELB's life. The metrics are a single-digit price-earnings ratio, a reasonable dividend yield, no debt to speak of on the balance sheet, and about 700 million rand cash versus a market cap of 850 million rand.